Hi, folks. I just want to give a little more insight into the basics of Elliott waves. Like I said earlier, you can learn that a trend has changed earlier than with moving averages. So imagine seeing 5 waves up here and then seeing this 3-wave pullback and buying, call it somewhere in here, even if you didn't call the bottom, buying at 15 or 14 or 13 with it bottoming at 11, and yet the person who's waiting for a designated trend change like a moving average crossover really is finding out, and getting more confirmation about that at like 17 or 18. So imagine, and especially with averaging down like we do, even if you went, 15, 14, 13, and let's just say you've got an average price of, 14, for instance, and the average technical trader's got an average price of 18. That's a big difference. Also, your risk is a lot lower because you're a lot closer on your average to the bottom of wave 2, which can't go below the bottom of wave 1. So your downside risk versus your upside reward is so much better than the average technician that's just looking for things like moving average crossovers. And then the trend isn't over until you've seen 5 waves up. So 1, 2, 3, 4, 5. So, you won't know in real time when the actual end of 5 is coming. Typically, now you can zoom in on your charts, on intraday charts on a wave 5 and try to count 5 waves up and get fairly close. But let's just say like you were well into wave 5 and you were past the end of wave 3 and you were exiting at say 29 and it goes to 30, then you know that you've pushed it and you probably should get out, and you still didn't call the top, but you avoided the 3-wave correction of this trend that follows, that went from a little above 30 to almost right at 20 even before wave C ended. So you were able to get in quicker, get in at a lower price, ride more of the trend, avoid a lot of the down move. Because remember, when does just the regular chartist and technician know when things have changed? Well, things start to have to make lower lows, and you usually look for things like moving average crossovers. But by the time it crosses over, remember the price is way down here that caused the crossover. So so you're really finding out, way down here, 24, 25, not 29. So you added so many points to the top, you added so many points to the bottom, you were in it longer. You got in lower, you had less risk, you had more of an idea of when the trend was going to change up here than the regular technician that's having to wait for something to way down here to change when half they've experienced half the downtrend already before they realize that they're on the wrong side of the trade now and they're giving back profits needlessly. Then once the 3-wave pullback is over, then of course that and again you would start counting 5 little mini waves up on smaller time frames. But by the time it goes 5 waves up and has a 3-wave pullback, you're still back in it pretty darn low, like call it 22, and able to take advantage of this move here long before this golden cross happens here, and long before people are realizing that this is breaking to new highs. So lots of things and lots of edges that Elliott waves can give you that just traditional breakdowns and breakups of resistances and supports and moving averages and things of that sort just can't tell you nearly as quickly.